Without tariffs, what would you do? You know what? Everybody would be bankrupt, everybody. The whole country would be bankrupt. And I have to wait for this decision. I've been waiting forever. And the language is clear that I have the right to do it.
Yeah, wasn't quite so clear to those justices during oral arguments. Justice Wolfers joins me now. He's a professor of economics and public policy at the University of Michigan. Justin, good to have you back.
G'day, Jim.
So, the whole point of tariffs was to reduce trade deficits, and yet, big jump in the deficit from November to December, but also, quite a large jump in imports for the whole year. Does this show that tariffs have failed?
Hey, Jim, I just want to take you back about a year ago when President Trump announced the idea of tariffs to address the trade deficit. And every economist around the country said, that's a very bad idea. That won't work. There's been a lot of ups and downs over the year. But if you look at 2025 as a whole, we have basically the same trade deficit, maybe a little bit bigger than it previously was. So going to score this one for the economists, mate.
Yeah. So the trade deficit stayed high. There has been no grand return of manufacturing jobs. The next piece is prices, right? Because there had been some price pressure, but the thinking had been that manufacturers were eating those tariffs until now. Are we about to see big upward pressure on prices as they begin to let you and me pay for those tariffs?
Right. So the studies so far seem to suggest that nearly all of the tariffs are being paid for by Americans. But the way they're being paid is the corporations haven't passed on to higher prices yet. A lot of them, They've got lower margins. Now, I just want to remind you, by the way, if you've got a 401k, that actually means your 401k is paying the tariff rather than you paying it at the grocery store. But yeah, eventually they're going to want to restore their margins and we'll see prices go up. Now, one thing to remember is I don't think the price rise is going to be enormous. And that's because, yes, Trump announces big tariffs and then he walks them back and then he allows special loopholes for his mates. And it turns out he's not actually imposing tariffs anywhere near as big as he said. And as a result, we're not quite seeing as much pain as we might otherwise see.
Let's talk, if we can, about this blue owl news here and how the rest of the market has been reacting regarding private lending. There had been warnings about this in recent weeks saying, hey, numbers don't look so good. Do you agree with Mohamed El-Erian that this is a canary in the coal mine moment?
I mean, it could be. I think it's important to try and explain to the folks at home what's going on. So here's a funny story. Let's go back before the financial crisis, 2006, 2007. There was something called the shadow banking sector. These were not banks, but they'd lend money as if they were banks, and they weren't regulated. They blew up. That created a global financial crisis. So we put tighter controls on everyone. After that, that includes tighter controls on banks. And guess what? This new thing arrives called private credit, which is basically guys who aren't banks lending as if they are banks. Have you seen this movie before? And so the same sort of dynamics that could cause a regular bank to have a bank run are playing out in these private credit markets. This canary in the coal mine, it's not particularly a big deal, but it does show that every time you sort of shuffle things around a little bit, that these guys pop up, they try and get a profit, they try and get around regulation, but again, they're just going to cause problems.
Yeah, some of the details were just alarming, and you know this far better than me, but the idea that when some of the debtors couldn't pay, they would just then the lenders would just roll their interest into just a bigger loan. I mean, which is, anybody's like bought a house or, borrowed money for a car. Lenders don't normally do that. If that bubble were to burst, is it insulated from the broader banking market, or is there a kind of domino effect that's possible?
By Jingo, I can't tell if you're asking me this question in 2007 on the eve of the financial crisis or in 2026. That was the big question back then. It remains the question now. So it turns out these not banks, they do get credit from actual banks. And so some of their problems could start to seep into the rest of the financial sector, and therefore where you and I keep our savings. One of the really worrying things is these not banks that act like banks have been lending money a lot to the software industry. With AI about to blow that up, they've got a lot of loans to a lot of firms who may not be able to repay. That's the sort of thing that can start to cause the sort of For those of us, again, old enough to remember 2008, it could cause those headlines to come back. But again, this is just a small, early problem. It's nothing like that yet. I just kind of know I've seen some of these maneuvers before.
Yeah, history doesn't repeat itself, but it rhymes, as they say. Justin Wolfers, thanks so much.
Pleasure, mate.